about deal analysis 101. We're going to be breaking down the numbers on a 100K flip. A lot of us never get to see a 100K flip. So you're in for a treat, especially if you haven't looked into some of our deal analysis tools. You can always DM me stress test toolkit, and you can get something similar to what we're looking at today. It's basically a modified version so that you guys can run deal analysis on your own deals. But if you're new to the channel, like, comment, subscribe, or DM me cash flow if you're on Instagram. If you're new, make sure you reach out with your questions. Drop your questions in the chat. Drop your questions in the comment section. If you're interested in any of our real estate mentorship programs, we have the Ride Along. That's where you spend a day with me in Philly, boots on the ground, inspecting properties. So we're going to do that on August 31st. That's a Saturday. That's coming up at the end of August. So make sure you reach out about that. We're already almost sold out on tickets. So we have the Real Estate Ride Along Tour. We have the Boots on the Ground program. That's where we find, finance, rehab, tenant, and manage properties for you. So if you're interested in that, DM me Boots on the Ground, or just reach out, text me about it. We are on limited capacity. We only have a couple of spots open, like 2 spots open on that right now. And we're on the brink of launching Baltimore as well. A lot of people are interested in Baltimore. One thing about Baltimore, that opportunity will go to the existing Boots on the Ground members first. So if you're not in the Boots on the Ground program, you probably want to get in. But don't think you're going to tap in once we go to Baltimore like, oh, yeah, put me in Baltimore. The people who are already in want to get into Baltimore. So we're going to get them in first. You would probably have to wait behind them. And then if you're interested in our inner circle, if you just want to get access to, private money lenders and our resources in our inner circle program and be able to network with other like-minded investors who are doing deals all across the country, who look just like you, talk just like you, sound just like you, reach out, DM me inner circle, and we'll get you tapped in there. Let's start with mindset. Guys, once again, if you have any questions, drop them in the chat, drop them in the comment section, and we'll answer the questions as we continue to flow. So don't be shy there. The mindset for today is that real estate is time freedom. And guys, we're on the YouTube channel. You'll be able to see a lot more on my YouTube if you're on Instagram. All you have to do is go on the IG stories and click the link in the IG stories. It'll bring you over to the Instagram. And you can even watch the replay on on YouTube. It'll bring you over to the YouTube channel, and you can watch the replay on YouTube as well. Real estate is time freedom. A lot of people get into real estate for the money. And we're talking about 100K flip, right? So you might be sticking around to say, hey, I want to see what this money looks like. Can you really make 100K on one deal? And you can. I'm going to walk you through the numbers and what it looks like. This is a deal that one of our Boots on the Ground members put under contract this morning. So we sent it out over the weekend. I stayed up while some of us were out partying and doing different things on Saturday. I was cranking deal analysis, blasting out deals. So I sent out a 100K flip opportunity on Saturday night to our Boots on the Ground members. One of our members started working on that right away, got it under contract this morning. So if you're hustling, if you're tapped in, you can get to these opportunities. If you're out partying, you're distracted, you're going to miss it. But people are doing this while you're partying or while you're working, while you're stuck in the 9 to 5. It's happening. So just stay locked in. But real estate is about time freedom. It's not just about money. So a lot of people get caught up in the money. And that's not the right mentality, because you might be coming at it saying, I don't have enough money. It takes too much money to get into real estate. I was watching one of my guys that I follow, Al, and he's in Camden, which my grandmother still lives in Camden. My whole mother's side of the family is from Camden. My father's side of the family is from Palmyra, so South Jersey. I was born in New Jersey, raised in Philly. But he's still in Camden, and he's building up that hood while I'm building up Philly. So we've crossed paths before. We follow each other. And he was talking about how he was working and making good money, but how he viewed real estate as just time freedom. So he's like, even a property that cash flows $300 a month, I'm looking at that and saying, well, damn, that's a day of working or 2 days of working, the 9 to 5. So to him, he's like, that's 2 days off. So each rental property to him represented, even as little as $300 a month in cash flow, was like 2 days off. So he's like, well, if I get 15 of these or 20 of these, now I'm out of the 9 to 5. And he's gotten up to that level. I've watched him scale slowly but surely, taking his time. doing it the right way and documenting it the entire way, his way out of the 9 to 5, out of the hustle and bustle, just one at a time. But with that focus of this is time freedom, forget about the money. And that's the right mindset to have, because when you say financial freedom, most people think about the financial part. They think about going on vacation, spending money, being flashy, buying a car. But it's the freedom part that really matters. Because even if you start working in real estate, you're still going to be focused. Like me, I'm still Saturday night, I'm grinding the real estate still, but it's fun because it's a passion, but it's also I'm free. So if I want to get up and work out, I can go work out. If I want to do more real estate, I can go do that. If I want to get up and go out of the country, I can do that. And that's the freedom that you really want. If you had to choose between one or the other, you would take less money to have complete freedom, to be able to earn equally to what you're earning now, whatever you're earning. If you could keep earning that, but have complete freedom, not have to get up and leave your family or go anywhere, you would do it all day. So you have to get mentally tapped into the freedom aspect of this thing. Real estate is really about freedom. The more you focus on the freedom, the more you will build a cash flow position that allows you to make more money, that allows you to leverage yourself. Because once you're free, once you have your time back from the 9 to 5, you can now apply that time into the real estate, and real estate will pay you more than anything. But you got to get your time back. If we all share one thing on the planet, it's time, right? The same 24 hours in a day. So you got to get your time back. Focus on time freedom. Don't focus on the money. The money will follow the time freedom, because whatever you apply your energy to produces income. It produces profit, but you need to produce it for you, not always for other people. So stay tapped into that. And if you don't know how to get started, just DM me. DM me cash flow if you're on the IG. DM me boots on the ground if you want me to find, finance, rehab, tenant, and manage properties for you, like we're going to talk about right now. And DM me ride along if you want to get into that ride along tour. Come out, get your 24/7 cash flow hoodie, get your gear, spend a day with me. Let's get into this deal analysis, because I want to show you guys this stuff really quick, and then we'll open up into some Q&A. If you guys have questions, drop them in the chat, drop them in the comment section, and we'll keep flowing. Silverman Fox said, New Jersey in the house. He's talking. He's not just talking, he's preaching. It's definitely the truth, guys. It's definitely the truth, and it's a path that I've walked and lived. Let me spin you guys around on the IG so you guys can see some of this. So I'm blowing this up full screen for you guys. This is a 100K flip deal that we just sent out over the weekend. So this is a big property, 2,900 square feet, which square footage is going to give you a lot of value. It's 6 beds, 3 baths, RSA 5. That's residential single family zoning. You need to learn your zoning if you want to be able to get to the next level. You have to understand kind of what's going on there and how to read through these numbers. They were asking $375,000 for the deal. I put the offer range at like 350, but I told my people, you can go over asking for this. You would need to come up with a good chunk of change to get into this deal, about 76,000. But there are different lenders who will help you out there. There are private money lenders. There are different people who can help you to get into these deals. The rehab budget, 150,000. I'm going to walk you guys through the rehab budget so you can see kind of how that maps out. Now let's get into, let me move this over. Let me take myself out of the screen. This is the P&L. This is how you want to look at your deals. So the sales proceeds, the after repair value on this property is $725,000. I'm going to show you guys the comps on this deal too, because, and this, by the way, guys, this deal is right on the MLS. Any one of you watching this right now could have seen this deal if you would just do what I tell you guys to do, which is look at deals every day. Wake up in the morning, look at deals. Get a lunch break, look at deals. This deal was right on the MLS, publicly listed. It was on Redfin. Any one of you can see this. Learn this discipline, and you can hunt for deals like this. 100K deals. They're right there under your nose in a major city, even like Philly, top 6th largest city in the country. Have to be paying attention, though. We're going to get a 100% lender. This is what we're kind of mapping out here, offering 93% or even asking. After we put in our money, we put in our rehab, we get our short-term loan costs. That's our hard money costs. We get our sales costs, which is our realtor commission, 8%, 6% realtor's commission, 2% transfer taxes. The net proceeds, if we just sell at the ARV, 118,000. Okay, 118,000 on the flip. Let's get into the rehab budget. I'll walk you guys through these numbers real quick. So this is going to be a cosmetic rehab. It's a big property, but cosmetic rehab. Going to put in a nice kitchen cabinet set, 6,000. Countertops, granite countertops, 3K. Appliance set, stainless steel, 6,000. These are real numbers. You can send directly to a hard money lender. Bathrooms, there's 3 bathrooms. We're going to redo all of them, about 7,500. Flooring, we're going to keep the original hardwood flooring because in this area, the people actually like the original look. So even though it's not, to me, as clean, sometimes when you're flipping a house, you have to build it to the market. So the market likes keep that original look. Even if it's not perfect, they want that historic type of look. Trim and finish work, interior doors, 8K, because it's a huge property. Sheetrock and insulation, 22,000. Paint, 5K. That's interior and exterior. Windows, 5K. On your big 3-story properties, your windows going to be about 5,000 because you have way more windows. And this one has like, it's semi-detached, so it's even more windows than normal. That could hit 6K. Framing, minor touch-ups. We might, add an extra bedroom in here, add some extra space in here. Above ground laundry room or above basement laundry room, 10,000. A rough plumbing and finished plumbing, about 11,000. That can get you through on a single family. On a multi, be more. Electric, another 11,000 for the electric, rough and finish. Probably put like recessed lighting on the first floor. Mini split. If we go in with the mini split system, so to put the heat and AC in efficiently on a property like this, 18,000. Demo, 7,500 because we're keeping a lot of stuff for the historic viewpoint. Masonry, 3,500. Roofing, 4,000. The roof's pretty good. Exterior TLC, the exterior is pretty good, 5K. Basement TLC, just to clean up the basement, about 3,500. Dry lock the walls, make it weather tight. That's about 3,500. And then we got miscellaneous, put in another 4K, so 150,000. So you got your budget there. You guys can watch this over, but you got your budget built in there. Let's get into the comps. So we got comps. What people kind of like about how I do my analysis is I'm not overly aggressive. So I'll put like something towards the bottom end or the middle of the comps. You can see they have ranges up to the 760. Let's take a quick look into the comps. I wanted to open it up for you. Properties right kind of in this pocket, 48th and Cedar. You can see we got a 760 right there. We got a 725 right there. And this is like blocks away, guys. If I come up a block over here, I actually have an 860 right here, another block away. That's 860,000. These are all kind of preset for the similar square footages. If I zoom out even more, you'll see there's more 760s. There's 900,000s. There's a million right there. There's a 730 right there. There's a 725 right there. There's another 850 right there. There's an 850 right there. So deals like this are sitting right on the MLS. They're sitting right there, waiting for you to wake up and step up, run your analysis, and get in front of these deals. So I saw this deal. I actually just sent out another one that's a few blocks away from this one where they're asking a similar price. And the profit target's like 99,000. I just sent that out an hour ago to our Boots on the Ground members. Because some of our members like to flip. Some like to hold, but some like to flip. So these flip deals can definitely change your life, guys. It's not that you have to go after 100K flips either, because you need a little bit more capital to play with. But you can go after deals where you can flip and make 40K, 50K. For most of us who are watching this right now, if you did one or two of those deals, you wouldn't have to work a 9 to 5. And by the way, you could get through a rehab like this in about 12 weeks once you get the system down. If you don't have the team, reach out, DM me Cash Flow, DM me Boots on the Ground, DM me Inner Circle, get tapped in. It's not just my teams, but even in our Inner Circle program, we have people who are doing deals all over the country. They have teams, they got crews. People will network with you. People will share resources with you within the group. They're already doing it, sharing all types of resources. But if you want me to do it, we'll do it for you as well within the Boots on the Ground program. So you can always reach out about that and just DM us. But these deals, the point is, these deals are right on the MLS. It's not just in Philly. Philly's a great market, but it's all over the country. But you just need a few basic skill sets to be able to analyze these deals. The only way you're going to be able to analyze these deals quickly and be able to get in front of them is if you look for them daily. Because guess how long this deal sat on the market? Like 48 hours. And we got it. It's gone. So by the time the average person wakes up, they want to kick the can. They want to talk to their uncle. They want to do all this stuff because they don't have the skill set. The deal's gone. That's how fast they go. So don't let people also tell you that you can't get good deals right off the MLS. Out of the 300 plus deals I've done, almost 400 now. We'll probably be at 400 by the end of the year under my belt. I would say 80% of those have, well, maybe 70% of those have come off the MLS. Definitely the lion's share. So it's definitely available. It's definitely possible for you guys. Guys, if you have any questions, comments about any of this stuff, drop them in the chat, drop them in the comment section. We'll open up to some questions. But I wanted to take just a quick second to walk you guys through what these deals look like, being able to see the comps as well, to see that, they're selling these things for 50 cents on a dollar, 40 cents on a dollar, right on the MLS. And I'm not even running it at the higher comps in the $800,000 range, which this could, potentially sell for. So just stay tapped in, stay locked in. Once again, if you need help with anything like this, just reach out and DM me. And we have our stress test tool. If you want a toolkit that will help you to analyze deals like this, we have one for you. Just DM me stress test, and I'll send you instant access. I'll send you a link. You can download our toolkit. And being able to analyze deals just a little bit faster, 1% faster than the market, is going to allow you to get these deals ahead of the competition. So you have to be faster to be able to get these deals. Let me open up for some questions. And certainly, if we have a bunch of flies on the wall today and not a lot of questions, we'll wrap it up. Because I'd love to get back to finding some more deals. That's really my focus right now, is just getting more deals for you guys. And we sent out a bunch of other deals too. We sent out a bunch of buy and holds today. We're sending a bunch of stuff. Bella, you said, link please, DM me stress test toolkit. If you want the stress test toolkit, you have to DM me so that my team can grab it and pick it up. So DM me if you're interested in anything. And also, like I said, the Ride Along Tour, that's going down August 31st. So those tickets, we got the pre-order tickets, but they're almost sold out. That'll be sold out before you know it. But DM me if you want access to any of that stuff. The toolkit, if you want to learn more about our Boots on the Ground program, so you can get on our mailing list for these deals as we're sending these deals out. We've been putting under contract maybe, I want to say 2 to 3 deals a week over week for several months now. It seems like the deal flow is just picking up. And the market is really picking up right now, I'll say nationally. Even if you've been sitting on the sidelines, with rates ticking down, what I'm seeing is the market is just picking up. It's getting absolutely insane. Jay said, let's get into Baltimore. Baltimore is definitely coming out soon. Baltimore is a different type of market. I am going to get us tapped into Baltimore. I know we've been talking about it a lot, but there's a right way to do it. It takes time to bake a cake. Like it takes time. You can't rush entry into a market. You have to make sure everything's perfect. But there's definitely going to be some opportunity in Baltimore. So Baltimore will be great if you're working on a very tight budget. If you're starting off with 15, 20,000, Baltimore is a great market for that. You'll be able to get in, and we have hard money lenders and everything laced up for you guys. Jordan said, hey, Brian, how would the deal you walk through work if I used a private lender? I'm new to that play. Like if you used a pure like private money lender, I mean, you could structure a deal because there's always a cash contribution with a lot of these deals. people might look at them and say, man, I don't have 70,000 to get into this deal, 80,000 to get into this deal. I certainly didn't have that when I was first getting started. I had about 15,000, maybe 20,000 to my name to get into any deal. So my first deal I got into was 7K. So I didn't have anywhere close to this. I mean, I was completely flat broke. And I just caught a couple commission sales and was able to leverage that into my first deal, doing an FHA house hack, which I want to talk about. If I remember, I'll loop back to that. How you would structure it is you get a private money lender, which we have a couple of private money lenders in the Inner Circle program. And you would have them come to the table with the cash contribution. So they would come with the 70K because they're going to look at the deal the same way I am and just say, there's a lot of opportunity here. So if you know how to rehab, you have to have resources. Like if you don't know how to rehab, you better know how to get in touch with somebody like me or something. Like you're going to need something to kind of prove track record. But let's say you know how to rehab, you have a crew. You see the comps. I just showed them to you. They're still up on the screen on the YouTube channel. You could come to a private money lender and have them put up the money and then just offer them a rate of return. You might offer them 20% return. Hey, we'll get through this deal. We're going to rehab it in 3 months, put it on the market in a pocket like this, which is kind of like getting into University City area. That deal will sell in 30 days, especially that size. People want it if you build it the right way. So that property sells, you make 100K, or let's say it doesn't sell for 725, it sells for 695. You make 75K, you kick them 20 G's, or you kick them 14,000, 15,000 profit, giving their money back. And that's that. So you just do some type of profit share. The thing about a private money lender is they're just looking for a return, but they're not the bank. It's not like they have a fixed process where they're like, I got to make this on this particular deal. It's really a negotiation. So you'll get whatever you negotiate. So you don't need money. That's the thing. Like in the real estate game, you need knowledge. What I'm showing you guys is knowledge. I'm not showing you money right now. I'm showing you knowledge. If you had this knowledge and resources, access to the contractors, access to the different people, you could go raise the money. And all you have to do is think about it. It's another mindset thing. How long does it take to raise money versus earn money? Well, you could work a whole year and not make 100K, but I could pick up the phone and present a deal and raise 100K in 10 minutes with the right deal. So because it takes less time, as we're talking about time value and time freedom, it's not only physical time freedom, you being unplugged from the job, but it's mental time freedom where you're not so locked in mentally to working day by day to earn money, where your mind is a little bit freer and you're like, wait, I could actually raise money, or I could tap into money that's already there as long as I have opportunity. So now my focus is on getting opportunity. When you unlock mentally at that level, you'll start to really see the opportunities out here, which is there are lots of people out here with money. There's lots of people out here with 401ks and IRAs and stuff, and they're not doing anything with it. They're getting 5% in the market. So if you can come to them and get them 15% on a deal that's asset backed, it's not like they're investing in paper stocks now. This is a physical property with a appraised value, and you can build it at a certain price point. I mean, you could buy them deals like this for 50 cents on a dollar. So that's $300,000 of equity. You know, it's kind of there. Somebody asked, do I do private money lending? I don't personally do private money lending, but we do have private money lenders within our inner circle. So within our network, if you tap into our inner circle mentorship program, we meet privately as a group Wednesday night at 9 Eastern, every Wednesday night. If you tap into that group, we have private money lenders in the group, and I can connect you. I actually just connected a guy who he didn't even join really an inner circle. He joined a VIP mentorship program like a year ago, and he was doing a home renovation, and he got stuck in the home renovation because the lenders wouldn't give him the money. The banks, they wouldn't give him the money. They wouldn't allow him to access the capital. But he's like, when I finish this addition, he did a whole addition onto the property, and it's going to increase the ARV by like 150,000. He's like, once this addition is complete, my ARV goes up. I can grab the equity. So he ended up connecting. I connected him with the private money lender, and they're talking right now, structuring a deal so that he can get his hands on the capital to get through the deal, and it's completely asset backed. It's a primary residence, it's very safe, and the guy's got, great income. He's a great applicant. So if you're in our group, I can connect you, but I can't connect everybody. Like if you're outside of the group, I can't connect you because then it takes away resources from the inner circle members. But within the inner circle, I mean, there's those resources, but there's also people building houses all over the country. So if you wanted to, build somewhere, like, hey, is anybody in Cleveland? Yeah, we got people in Cleveland. We got people from all over the country who are doing deals. So definitely reach out if you're interested in any of those types of things: private money lenders, contractors, architects, engineers, different markets across the country, cheaper markets. I was talking to one guy today. He's in a very expensive market. He's priced out. And it's just like, bro, just tap in. Learn how to invest out of state. He doesn't know how. He doesn't have the resources. And you have to look at your circle. Look at your circle. Like, who's in your circle? Who are you going to call to get through a deal? Who are you going to call? Who's in your circle who knows real estate, has done deals, has relationships? If you don't have anybody in your circle, you need to tap in. You need to expand your circle a little bit. That's going to help you tremendously. Because walking around, if your circle is everybody's broke and nobody knows anything about money or real estate, and everybody's just afraid of real estate, how's that going to help you to get ahead? And if you run out with that type of circle and try to get into this game with no knowledge, no mentorship, you're going to pay the ignorance tax. You're going to get beat over the head. And that ignorance tax is unforgiving. It costs a lot of money. You can get ripped for $50,000 by a contractor easily, effortlessly. So you really do need to invest in your own education first before you go out into this game. But that's how the private money would work, is you would go to them to get the cash contribution and then go to the lender to get the rest of the money to do the deal, and then you execute on the deal. It's a bit of a off the top rope maneuver. It's if you don't have any experience. If you have as much experience as I have, or if you're tapped in, it's a bit less risky, because you already have the pieces, you already have the contractors, you already know what the rehab costs, you already have all those things. So just choose your risk wisely. Some people are penny wise, pound foolish. So they say, I don't want mentorship, I'm not getting scammed. They gotta have all these mentalities and really roadblocks. They're blocking themselves from getting to success. But then they run out into a deal and pay the ignorance tax. They get beat for 20 grand. And it's like, yo, the mentorship was $2,000. But you just got beat for 20 because you were hard-headed. And then even after getting beat for 20, you still don't know anything. All you know is you just got beat for 20 G's. You barely know how until you call somebody like me and say, Brian, does this look good? And I'm like, no, this looks horrible. This. And even that conversation, one time, it's not enough. You need repeated access to the knowledge until you absorb it. And you need to see all the variations of how this game works, all the different ways to make money, how to structure deals. There's so much knowledge out there. Once you get the knowledge, you can easily accelerate. Really, almost anybody. Because real estate is not that complex. It only feels that way when you're just getting started, but you can get the hang of it. It's riding a bike at that point. And we're going into a very easy marketplace where interest rates are going down and profit spreads are going to improve. It's already happening. So you just have to play this game the right way. Or you go out and pay the ignorance tax. Go lose 50 to 100,000 if you can afford to lose that. Most people can't. So then they try and they fail. They lose the 50K they had and then they're out of the game. But you can go do that, or you can just learn. It's not just about me either. You could learn from a lot of people. I'm one of them, and I'm probably one of the best to learn from, but you can learn from a lot of people. Just my recommendation is don't get beat over the head in the school of hard knocks. It's very painful. It costs a lot of money. It's not going to help you. Not holistically. It's only going to teach you one lesson at a time, and you really need to learn about 100 lessons. You need to learn about 100 lessons before you do your first deal. You should learn about 100 lessons, or at least get exposed to 100 lessons worth of game. That's why you would need something like at least my stress test toolkit, so you know how to analyze a deal. That could save you from a bad deal. That could save you from a nightmare right there. And that's free. All you got to do is DM me stress test. That's free. And many people won't DM stress test because they're afraid of getting scammed by knowledge. But they're not afraid of getting scammed or burned by the school of hard knocks. It's a type of arrogance. It's a type of arrogance that you have to overcome to get to the next level. Or you can get burned. If you have enough money, you just get burned and then you'll figure it out. What are your thoughts on with Japan devaluing the dollar further? How would it? I'm not that worried about what Japan's doing with the dollar and Forex and all that stuff. I would say if inflation is going to continue to happen to the dollar, you want to own assets. You want to own real estate. All signs, as you get into it, will point to own more real estate. Because if inflation happens and you already own assets, your assets are going to appreciate. You're not going to feel the impact. Rents are going to go up. Prices of housing are going to go up. And your value, your assets are going to appreciate. So you're going to offset any negatives. You're going to be hedged. So that's what I would say. Oh, they're doing that? Buy the real estate. That's, if you look around the country, a lot of people, like, I dropped a video like a year ago. China in 2023 poured like $1 billion. I can't remember if it was one. It was like almost $6 billion into U.S. real estate. $6 billion Chinese dollars into U.S. real estate. They're buying it all up. They're buying it all up. So they're hedging their countries with U.S. real estate. But then you have people here who don't get it because you're here. You don't understand the value of your own land. Especially people in the hood. People in the hood don't get it. They don't buy their own real estate. They rent. And your rent's probably going to double. They say your rent doubles every 8 to 10 years. Rents double every 8 to 10 years historically. So if you bought something today and held on it for 10 years, chances are your cash flow would almost double. If you're renting it out, getting $500 a month in cash flow, held it for 10 years, you'd be getting $1,000 to $1,200 a month on that same asset. Now, what if you got 10 of those? Like my guy Al, we were talking about, he got a bunch of properties, cash flowing $300 a month, $400 a month, but he holds them for 10 years. Now the cash flowing $1,000 each, and he's got 30, 40, 50 of those, 50,000 a month. That's the game. It's not being too short-term focused. That's another thing that'll hurt you. Being too short-term focused. Just thinking about now, what's it worth now? How much money I got locked in now? Oh, I can't do that. I can't lock in 20,000 into a deal. I can't do it. No way. And then the property appreciates 300,000. Did you really ever lock 20,000 into that deal? If it appreciated 300,000 in 10 years, it's just an illusion. So you have to invest. You have to put your money in. A lot of us will put our money in a 401k because somebody told you to, your financial advisor or your boss. You'll put all your money in a 401k. You don't even know what stocks, bonds are in it, in the mutual fund. You don't know anything about it. But won't invest in the real estate. Makes no sense. But I'm not that worried about Forex in that sense. It's not going to impact us as individual investors right now in our opportunities right now. Guys, if you're getting value, like, comment, subscribe. And if you want to tap into any of our programs, the Boots on the Ground program, DM me Boots on the Ground, the Real Estate Ride Along Tour, Saturday, August 31st, DM me Ride Along, get your Ride Along ticket, get your 24/7 cash flow gear. And if you want to tap into our Inner Circle program, reach out about that as well. Let's get into some more questions. Brian, do you feel that the market prefers central air? Should the rehabs include mini splits? It depends. So even this flip deal, like this 100K flip we were looking at, they're fine with radiators. I actually asked if you want answers to these questions, just ask the realtor because they're the ones out selling it, talking to the buyers. So I was asking a realtor, what do they want here? He's like, bro, they'll take the radiators as long as you keep the historic vibe to the property. So, it depends. It really depends on where you're at. Mini splits can be good because it can provide that heat and AC at your budget, and it's a little bit more friendly for your property because you're not putting all the ductwork in. So it allows you to do it on a rehab without creating as much damage. So if the property's already in good condition, you don't have to damage the walls and the drywall. So people definitely like the mini splits or the central. And they're like, I hate mini splits. Why isn't there central air? Or there's central air. Why aren't there mini splits? People just want to be cool when it's hot and warm when it's cold. Like, that's it. People are actually pretty simple. So most people, especially in some of these major cities that are over 100 years old, like Philly, built in 1910, 1920, most people in these cities, because they don't have the central air or the AC, any way you get it in the property, they're happy with it. Most of the time, they're just happy with it. So it's really a preference that you will develop as a builder. You'll kind of develop that over the course of time. Marlon, and guys, if you have questions, even on the IG, drop them in the chat on the IG. We'll pop into the IG. Marlon, hi, Brian, here for the boots on the ground work. Thanks. Definitely tap into the boots on the ground. Don't sleep on the boots on the ground program. We're running out of capacity. A lot of people are reaching out, every day about the boots on the ground. And for the people who get it, they really get it. I'm starting to see, actually, I was talking to a guy today, and he's like, I'm not a newbie here. I got experience, we'll see what you guys got. And I'm like, bro, the people who are experienced who tap into the boots on the ground program, they usually run in and grab like 4 deals in like a month or two. Like, they're in 4 deals. They're having just a freaking like kid in a candy store type of experience with the boots on the ground program, because we do make it so easy to get in front of the best deals. We make it so easy. Like, I'm cherry picking and handing them 100K flips, 50K flips, 40K flips, buy and hold deals, $800 a month in cash flow, $500 a month in cash flow, $1,000 a month in cash flow. We're just handing you deals week over week. We're always sourcing. We're always working. So yeah. So Vino Mortgage tapped in. He said, I'm here for the buffet. He's in the boots on the ground. He's probably closing in on like 3 or 4 deals. He's eating up all the best flips. So y'all should be mad at him in the boots on the ground program. He's eating up all the flips. He's eating your lunch right now. He's definitely there for the buffet. And his eyes are bigger than his stomach. He's grabbing them. So no, you guys, whether you're experienced or not, if you're inexperienced, the boots on the ground is great because it's like bowling with the gutter lanes blocked off. Like, you can't really gutter ball because these deals they have value. Even if an appraisal flops, even if something flops in the short term, you're still getting a property that you own that's going to cash flow you, and it's going to appreciate in value. These markets, like a market like Philly, if you buy a property for, like, we sent out one deal today for like 55, 65,000. You buy a property for 65,000. How is it going to go down in value? You bought it for 65K. There's nowhere for it to go but up. So as these properties appreciate, they'll cover an imagined loss. The rental increase. It'll give you more cash flow. It just puts you in a good position long term. And you're getting tax losses and deductions and write-offs, all these different things. So the total value of a deal is pretty high. It's pretty high. So it'll definitely help you guys. But even whether you're new, it'll help you. If you're experienced, you just run faster because I take so much work off your plate. Like, we're taking a lot of work off your plate. Carlos said, if I can't land a deal in PA, then be more it is. Baltimore is definitely a good area. You can get really good deals. But Baltimore is it's not tougher on lending, but you have to find the right deal because lenders don't like doing deals that are like the total mortgage amount will be under 100K. I was talking to somebody today. They bought a deal in Baltimore, not through me, but they just, they just got a deal. And I think they're all in it cash, like 75K. They're having trouble getting out of the deal because they weren't aware that the lenders thought like this. This is how the lenders think. They think like this. The amount of work I have to do to write a $10,000 loan, I'd rather write $100,000 or $1 million loan because it's the same amount of work, no matter which loan you're writing. That's how they think. So many of them don't go below 100K. So you don't want to be running around doing a bunch of deals. If you're going to do deals at that scale, then do multiple. Do 3, 4 of them. And then you can show up to the table with 3 or 4 $75,000 deals and say, put a blanket on it. It's $300,000 loan. They'll do it. Marlon said, how does it work? Just reach out and book a call. DM me, text me, however you got here. Email me. And just book a call. One of my team leads will walk you through the whole Boots on the Ground program, how everything works. Everything. For you. See if it's a good fit for you. And if you're on IG, you want to learn about the Boots on the Ground program, just DM me Boots on the Ground. And we'll walk you through the process. We'll send you all the information, walk you through it. Kendrick said, Kendricks, you still need to tap in. You've been around for like 2 years. You need to tap in, man. Are you saying your private lenders will fund the closing fees? Yes, that is what I'm saying. And you also have lenders that will do 100% of the construction loan. Yes, that is what I'm saying. That's exactly what I'm saying. But you got to tap in. Just Vibe says, how rich are you? So humble. Rich in knowledge. Very rich in knowledge. I'd rather be rich in knowledge than really rich in money, because with the knowledge, even if you lost all your assets, all your money, if you lost everything tomorrow, you could get it all back because you had the knowledge. If you have knowledge and relationships, I'd rather be rich in those 2 things if I had to choose. Knowledge and relationships. Knowledge and relationships. The money follows that. If you haven't noticed, the money follows knowledge and relationships. So somebody walking around with $1 million with no knowledge and no relationship, they're going to lose it. They're going to lose it. And I'll just come and say, all right, cool, whatever. I could print money with knowledge and relationships. You don't need money. You need more knowledge and you need more relationships. That's the value. Knowledge and relationships. Can we get hard money with a 680 credit score? Definitely. Their cutoff was usually like 660, 620, 660. 620, 660, where they start getting squeamish. 680, you're good. Baltimore may be a lot of red tape. It's definitely a little bit more red tape than Philly. It's definitely a little bit more red tape. Josias said, do you do this in New York? I don't do this in New York because it's too expensive. The landlord-tenant laws are not friendly. I'm not doing it. I'm not interested. Why do it in a city where the landlord-tenant laws are not in my favor and the prices are 10x when I could just go to Philly? I'm not doing it. I'm not wasting my time with that. I want to be in the top 10 cash flow cities in the country. If the top 10 cash flow cities change, then I'll be in those cities. When New York becomes a top 10 cash flow city, then I'll be in New York. And when their landlord-tenant laws get a little bit better, I'll be there. Outside of that, I'm not interested. Just like I wouldn't be interested in LA. I wouldn't be trying to invest in California. I wouldn't really be trying to go hard in Miami or kind of South Florida, especially with the insurance rates right now. They're jacking up your insurance in Florida. They're jacking up your HOA fees in Florida right now in South Florida. So I wouldn't be doing that. I wouldn't be in Colorado doing it because the prices are, once again, too high. Where else would I wouldn't be in Arizona really doing it. That's why most of the guys you see in Arizona they're talking about wholesaling or flipping. They're not really trying to hold because the prices, they just don't make sense. They don't make sense. You want to be in the affordable cities. You want to be in the top 10 cash flow cities. The best cities Philly, Baltimore, Cleveland, probably Cincinnati, a bunch of Columbus, all that whole market. Wilmington, Delaware is cool. See if there's anywhere else. There's some parts of Texas that could be cool. There's a couple of areas, but the top out of the top three, definitely Philly, Baltimore, Cleveland. And I'm just down to like keep running the play. Just keep running the play. We're gonna keep sweeping right until you blitz. Until you blitz us, we're just gonna keep sweeping right and just running the ball at you. Even Albany could be cool, but it's a bit more rural. They have great big houses in Albany, but they also have higher property taxes than some of these other cities. And Albany's not a sister city. I also like sister cities. I want to invest in sister cities. So I want great big cities with the jobs and with everything. Albany is always kind of being developed and built up, but it's like people aren't flocking to move to Albany necessarily, but people are moving to Philly. People do like the nightlife there. People do like the city. So I'm kind of interested in a city. I want to be in a hot spot. Philly's the sixth largest city in America. I like that. Baltimore has DC. People get priced out of DC, they move to Baltimore. I like that. That's why I like Philly and Baltimore over Cleveland. Because I'm like, why do people move to Cleveland? They don't. There are people, that's not to say there aren't people there, but it's not like there's people breaking their neck to move to Cleveland. There's not much there. But Philly has a lot of history. It's one of the original states, Constitution Center. It's got a lot of history, big sports teams, big jobs market, and a lot of money. And it's got 50 universities. Maybe some of them are shutting down, but it's got like 50 universities plus. So I like that. I'm looking for those sister cities. People get priced out of New York, move to Philly. I like that. So there's a lot to the game. There's just a lot to the game. Let's see. We got Kendrick said, "Yeah, I'm definitely about to tap in. You got to tap in, bro. We spoke literally like I want to say we spoke last July. We spoke last July. I remember it. It was definitely in July. Maybe it was the end of June, but it was right around that time. And you were like about to tap in or something happened. I can't remember, but you got to tap in." Jay said, "Definitely tap in." How is North Carolina in case of real estate? We have some people in the Inner Circle program. One guy who's really dominant in that market, and it's good. He's cash flowing. He's actually, we got to talk. We'll probably talk on the Inner Circle call on Wednesday night. He's usually on there. So if you're interested in that market, he would be beyond amazing to network with. Because when he joined us, he only had 2 properties, and now he's like crossed over 10, and that's in like a year. He just crossed over 10, and he's working on like taking over I want to say a 20 property portfolio from an older developer who's kind of retiring out of the business. So we're talking about creative financing. You know, that how to invest without cash or credit that everybody thinks is just like some sales tactic. Oh, you can't do that. Oh, I had one guy who's a real estate mentor, real estate guru, whatever you want to call it, kind of like, oh, you shouldn't share that information with people. You shouldn't tell them about that. And it's like, what? But my people are using it. So because we talk about it, he's using those strategies to try to structure and take over a deal from a sophisticated player. No cash, no credit investing is not just about trying to run in flat broke and negotiate deals. It's not just about that. You can have capital, but there are ways to structure deals that might be advantageous or attractive to even sophisticated investors. So like sophisticated investors, you don't always know this, but they're not always looking for cash. A lot of them are looking for cash flow without work. So if you can come in and say, look, I'll manage everything. I'll take care of everything. I'll give you a lease option. Everything falls on me. It's on my back. you're going to get a little bit of cash flow, not as much as you were getting, but you have no management. You don't have to deal with anything. They'll take it. That's what they're looking for. They're not looking for a big check. They just want a little cash flow and no management. So learning those strategies helps you as a sophisticated investor. It helps you in larger acquisitions. If you want to take over a 20 property portfolio, 40 property package portfolio, and you don't want to have to plop down $1 million to do it, you can structure that. You can structure those notes. Does the lender look at debt to income ratio? Not real. Like some do. Some hard money lenders do. Some private money lenders do, but not really. They don't necessarily care as much. They care about your credit score, your liquidity. This is what private lenders and hard money lenders care about: your credit score, your liquidity, and then your experience and the deal itself. Will the deal cash flow, or is the deal safe, or does it have a high after repair value? Is there value in the deal? If there's value in the deal and these other metrics are there, they'll do it. If not, they won't. That's kind of what they care about. Looks like we're almost out of questions, guys. So, guys, if you got value, definitely share the content with somebody else you want to get value. If you're interested in any of our programs, the Boots on the Ground, DM me Boots on the Ground before that fills up. And only reach out about Boots on the Ground if you're like serious, if you're ready. Because I don't work with everybody anyway within the Boots on the Ground. It's kind of, that can be like a little bit shocking to people. They're like, wait, you're not going to chase me around? It's like, no, I really don't care. Like, I'm not even joking. I don't care if you join or not. I'm here to help who I can help, but I can't help everybody anyway. I can't think about it mentally. I can't physically build houses for everyone. So I'm going to help the people that are ready. If you're not ready, then come back when you're ready. But things like the inner circle, they're there. If you need to tap in, you want to network, you need, private money and different access to the knowledge and everything like that, you can reach out about that. We have the real estate ride along. That's there as well. We're going to keep pushing until we tap into Baltimore. We're going to take the existing Boots on the Ground members and let them sample Baltimore first. And then we'll start opening that up to more people. But the train is moving, guys. Like, the train is moving. The market is moving. Interest rates are falling. Now's the time. If you don't get off the sideline, you're going to get smoked. Because I've been talking about rates kind of falling for over a year now. And now it's here. So this is the time where there's going to be a bit of a separation between the people who are playing the game and the people who are sitting on the sidelines. This is like your final call. So if you don't answer that call, you're no longer really, in my opinion, sitting on the sidelines. You've chosen to not get in the game because you're going to get left behind. So make that choice consciously and maybe have another plan. If you're not going to do this, what are you going to do? How are you going to get out of the 9 to 5? You got to have another plan. Or are you just going to ride out the 9 to 5 and wait for robotics and artificial intelligence to wipe you out? That might be your decision as well. So hope that helps, guys. For those who are on the inner circle, definitely tap in. We're doing another live with the What's a Mortgage group on Wednesday at 12 p.m. Pacific, 3 p.m. Eastern. We're doing a live with the What's a Mortgage group. I'm not sure. I do have a topic of what we're talking about, but I don't have it in front of me. But it's going to be a good session. Make sure you tap into that. And then for the inner circle people or the Boots on the Ground people, I'll see you guys Wednesday night on the inner circle call. If you guys want to get into the inner circle, DM me, inner circle. If you want my stress test toolkit, DM me, Brian, I'm stressed out. Give me that stress test toolkit so I can analyze deals. I don't even know how to point on the YouTube. So you can analyze deals. And just stay locked in, man. Just stay locked in. As these rates fall, prices are going to go up quickly. Profit spreads are going to widen. And it's going to give you guys an opportunity of a lifetime if you want to reach out and grab it. And deals like this are right on the MLS. So don't miss out. Talk to you guys next time. How much is Boots on the Ground? DM me. DM me Boots on the Ground if you want to learn about the price.